All right, hi guys. Sell the top, buy the bottom. This is the topic of Traders Talk this week, and I'm Ming Hon, your host for this week or forever. Okay, hi guys. If this is your first time joining, this is a show where we talk about trading the stock market and the things which we use to trade is mainly on options, yeah, and we talk just on options. I think there's a bit lag here. If you can hear me clearly, just give me a thumbs up. If Let me just check.
I think there's a bit.
Okay, I think yeah. Just before we started, I needed to reboot the computer because of the lag. I hope that it is actually gone now. All right. Great. So there are some topics which we will cover normally on our Traders Talk. If you have been following us for more than a year, which we have been presenting this show, normally we will start off by talking about the markets, and then basically we will follow through either with some training on structures or even technicals. And of course, today we will talk a bit more on the technicals, the chartings and technicals, so that you can actually use this kind of knowledge to actually trade better. And of course, it only helps you in trading. It does not give 100% certainty. Of course, there is nothing that is 100% certain. It is only giving high probability on your trades and to actually help you not to lose money, but basically to win money on the stock market. Yeah. So we hope that we can actually give some pointers there. And of course, these are also some of the methods which I use to actually trade. Yeah. All right, great. And let's start off with the markets. Let me just change the screen. The market has been quite good for the past week, and of course, if let me just make it bigger, you don't need to see me. All right. So the market actually has been quite good, bullish last week, and of course, if you had joined us on last week's show, basically we were actually at this level here. One, two, three, four. Yeah, basically we were actually at this level here last week, and what if you have joined the show, I think it is actually quite good because what we said here is that at this level of 3,900 points, right, it is actually forming potential strong support, mainly because of few factors. The first one, of course, we mentioned that this level here was previous resistance, where currently here there may be a potential level of very strong support. And of course, the other thing which we actually mentioned is that the retracement, right, from the lows, here, that means from the point A here to B to the highs here, this retracement is basically sitting at 61.8% Fibonacci. Yeah. So Fibonacci levels are also one indicator where we actually use to look out for support and resistance. Yeah. So these are some of the technicals that you need to actually put into your trading arsenal so that you can actually trade better and with a higher probability. Yeah. So that was what we have actually mentioned last week. Yeah. In last week's show. So that's why it's actually important that you spend a little bit of time watching this show. And of course, we only air about 30 minutes maximum. If there are many things to teach, we actually go about to almost an hour. So every week, basically, we do two things. The first thing is we issue a newsletter on every Monday for people who actually subscribe to our newsletter. I will post the link here. Okay, yeah. We do have a newsletter every Monday. We issue out a new newsletter, and of course, we do a little small write up on the markets, and also do a bit of training or teaching into the newsletter. Of course, I try to actually do this within the limited time I have over the weekend. Then, of course, if it is actually beneficial for you guys, and of course for those guys who have been following us and reading out this newsletter, if you're here or even if on Facebook, please give us a comment whether the things which we have been sharing over past more than a year, right? Whether it has actually been meaningful for you guys, and if it have actually some of the points have actually helped you to become a better trader. Yeah. So of course, this week is not so good week for myself because the inevitable thing came this week, which is of course all my family member except myself contracted COVID. Yeah, so my two daughters and my wife, they got infected, and of course now they are recovering. Hopefully, in a few days' time, they will be out of their room. So I'm the only one this week running around the house, doing the chores, preparing the breakfast, preparing lunch or buying lunch, getting dinner, doing the dishes, you name it, cleaning the house, mopping the floor, everything. So it is all on me. Of course, it is actually not an easy job. So of course, for those people who say homemakers are easy, it is never easy, and I truly respect the people who take care of their home and their family. And of course, the easiest thing is, of course, for people who actually go to work, right? And that is pretty much easy. You go to work, you come back, and then you go to work, you come back. You don't have to worry about any other things. Yeah. So that's my week, and just a little story to before we actually go back to the markets. Yeah. So yeah, I mean this was actually the charts for last week. We actually went up about 3% up. Not a lot, of course. We can actually go up further. And in fact, this week itself, there would be a couple of things which we actually need to watch out. The first thing is, of course, at 8:30 p.m. is actually the CPI, the Consumer Price Index announcement at 8:30 p.m. So of course, if you are scalping, then of course that is actually a potential place where you can actually scalp. But of course, the market has already gone up. I saw Nasdaq has already gone up about 100 points since the afternoon. Yep. So let me see. So for S&P, let's check S&P, how much it has actually gone up. S&P right now have gone up about 20 over points. Yeah. So I mean, the market is up. I would think the situation is a bit more bullish on the CPI. I mean, based on the preliminary data, they would expect the CPI to continue to reduce for this month, which was actually August reporting. So the first time when we had a reduction in the CPI from 9% to 8% was for the month of July. Yeah, for the month of July, which was reported last month. And of course, this month itself, we are actually going to report, and I would say based on oil price coming down and all, probably a little reduction, not a lot, but maybe either the same or little reduction. Of course, this little reduction would give a bigger impact to the market because this key data is what one of the data which the Fed used to actually plan out or work out the interest rate hikes. Yeah, as you guys know, the US has actually the Federal Reserve have continued to actually increase the interest rate. The last hike was 75 basis point, and we expect that the current hike will continue to to have another 75 basis point. Personally, I do not expect, even though the CPI would reduce this round, the Fed would actually scale down or slow down the rate increase. Yeah, and of course, one of the other things which actually happened is that ECB, the European side, has also increased the first rate, if not mistaken. The first time itself, they just banked 75 basis point, and of course, the Feds are not going to scale down when other countries are already quite aggressive. Even on start, they are already very aggressive to actually increase interest to actually curb inflation. So I would expect the rates which is actually coming on next week would next week means 21st of September. That is actually another key date for you guys to watch out, where the Fed would actually announce the hike on 21st itself. So this week, CPI today 8:30. Tomorrow is the what is that? The PPI, yeah, PPI, the production index. And then on Thursday, I think it is the retail sales data. So three key data are coming through, and of course, the market indication right now, it is still quite bullish. This upswing may potentially continue to go up further. Of course, the next level, if it continues to go up, the next level which we actually need to watch is this 4,200 level. Yeah, this 4,200 level, which probably may form some form of resistance here. And of course, if it continues to breach, then the next level which we need to actually watch is 4,300 level. Yeah. So in trading, basically, the key metrics, the key data which we actually use as an indicator is the S&P. Okay, S&P is actually one. Of course, we are not only trading on S&P, we are also trading on different stocks. But before we even trade on that stock, we actually look at the broader market, which we actually use S&P as a benchmark for the broader market. Because I mean, if the broader market is actually going up, right? It's actually going up. I mean, it may not also be so wise for you to actually short any stocks. Yeah, because the broader market is actually going up. Yeah. So, and if the market is actually coming down, then of course it is also not wise for you to actually long a particular stock. Unless the stock or the options actually is working on the inverse of the S&P. Yeah, the inverse of the S&P means that if S&P go up, the stock would actually come down, and if S&P come down, that stock would actually go up. Yeah. So mainly those would be the leverage ETFs and all those structures which they actually use to have an inverse effect on S&P. In fact, in one of our traders talk in the past, we also covered how you can actually hedge your position using inverse ETF. Yeah, if you have not seen that, go back, scroll through one of our many traders talk. We have actually covered that that you can actually use inverse ETF to actually hedge or protect your positions. Yeah. So these are the things which we watch for, and of course when the current show which we are also talking is sell the top, buy the bottom, right? Sell the top, buy the bottom. And one thing in trading, of course, everybody tries to actually how to say find or identify where is the top or bottom. Yeah. And of course, we would not really know. We can only so-called gauge and guess based on indicators, like earlier, which we have actually said, indicators like support points, Fibonacci, Yeah, these are the previous levels is also one which we actually use as an indicator to see whether the stock or the index has actually bottom out, and if there are any potentials to actually go up. There are many indicators which you can also use. Personally, I keep it to the basics. Uh, Either I look at the chart and sometimes I look at the stochastics also as an indicator. They are what is that? Bollinger Bands and all these kind of things. It gets too complicated, and I'm not the guy who goes into that kind of detail to actually trade. And of course, the other reason is um, I'm actually mainly trading on options, so I don't need to be exactly correct all the time. As long as I can actually get into a high probability trade, structuring with an option strategy, which gives me a buffer of movement to actually profit from the trade. Yeah, so that is already good enough. So that's why I love to trade options so much, mainly because of this kind of flexibility. Yeah. So like we said, buy the top, sell the top, sell the top, buy the bottom. Okay, and this is actually one of the thing where there's many tops along the way. Along the way, there can actually be many top. This can be one 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 top. Another top. Another top. Yeah, these are all the tops, and of course, we try to actually find which are the tops which give us high probability, and of course these top won't be breached, or the bottoms, like for example, this can be a bottom, 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 this can also be a bottom. Yeah. And if it is at the bottom, how do we actually find how to say situations or go into a trade where the bottom can be another deeper bottom, right? Or a top here can be a top, here can be another further top. Yep. So these are the things which we try to actually use the charts, the price action. When you actually study it, then there are some kind of indications of a top forming. And I think we have also gone through many times, many rounds, identifying tops using the M double tops as one of the more simple and basic price action charts, or the double bottom as another one. Yeah, so this is one way where we can actually use it. And of course, the other ones which we had used last week is another one, which is what is this? Resistance forming support. Yeah, so this is another way where you can actually find the bottom resistance forming support. You see, this was one resistance, and the other one is again the other one, support. Yeah, so if you look at this, then this is actually a very nice W pattern here. This W pattern here, very nice W pattern here, where it can actually give you a high probability entry on the stocks or the index. So the thing which I mentioned earlier, I use the index as a gauge where it is now, what kind of pattern it is actually facing before I actually go into a trade on the stocks. Yeah. So one example where we actually did a trade last actually about a week plus ago, we will actually share with you this trade where we actually did here, how we actually use this as a indicator, right? with S&P. Okay, this is already S&P daily. Okay, all right. So I think about a week plus ago, we did a trade on Visa. We did a trade on Visa, and if you know Visa, Visa is the Visa credit card, right? Visa credit card. Okay, and basically we have actually watched two things. We were actually eyeing on our watch list. Do have a watch list to trade. If you do not have, please work out a watch list where you trade maybe around 10 to 15 stocks in your watch list, where you basically study the charts and to actually get familiarized with the price action of each individual stock. Right, you don't need to have a lot. I mean, for myself, maybe I have a bit more, about 30 stocks, but nowadays I try to actually trade quite scale down on the number of stocks which I actually trade, and also the number of positions have also been scaled down due to the volatility. Okay, coming back to this trade where we actually did on Visa. First, we actually study on the price action, right? So as we have actually said here, what is that? Look at the S&P. Firstly, we look at the S&P 500 as a benchmark for the overall market condition. Okay, and of course, from the tops here, right, when we actually failed to breach this 200 moving average daily chart, what happened was the stock continued to the S&P continued to actually come down. Yeah, so it actually continued to come down until, and we were actually watching this position here. Maybe yeah, we were actually watching this position somewhere here. Maybe I do this here. Okay, so coming here, right, somewhere around on 31st of August itself, we were watching all the levels. And this was actually one level where we are actually watching at around 4,000 level, which is basically this line here. We were actually watching this line here. Yeah, we were actually watching this line here. And right at this line here, I think it actually dipped, if not mistaken, did it dip low 403,965. Okay, so on this day itself, the S&P actually went to 3,965, the lows, and it actually bounced off at this level. This level is let me get this thing away. This level was high of this level was 3945. Okay, yeah. So we were actually looking at the 4,000. We actually put it at 4,000, and it actually dropped below 4,000, and it actually went up. Mostly, I generally look at how to say, the bigger levels. I mean, because as I said, I'm actually trading options. I don't need to actually go on exact numbers of highs and low. If you are trading stocks, yes, you need to actually go on exact levels. But of course, when I'm doing options, more or less there, I'm okay. So the levels which we were watching was about 4,000. It dipped below, and it actually went back up on that day. So of course, that is the time where we felt, okay, looks like potentially there is going to be some form of support at this level. And of course, the fallback level is at this level here, smaller level here, where it's also about 3,900. Okay, so 4,000, 3,009, there is going to be one level here. If it breaches, then there is actually going to be a fallback level here to try to actually retest support level. So I would say is pretty safe for this kind of structures. There are two fallback. I mean, it's like playing baseball, right? Strike one, strike two, strike three, out. So you have chances. Yeah. So it's okay. I structured out some options trade during this day on Visa. On 31st itself, although Visa was actually coming down, we actually entered a trade on 31st itself while it was actually coming down here. And of course, the levels which normally people would actually expect Visa to come is actually at this lower level here. But I mean, for me, I think it is actually with this indicator here, I didn't actually want to wait. To actually enter a long trade on Visa. Yeah, because I don't think this will go down further, and as a result, continue to actually pull down Visa. So we entered a trade here. What trade we did? We did not just buy a straight call. We did not just buy a straight call because, of course, there are still some form of uncertainty here. There are still some form of uncertainty. So basically, like we have said in many of our previous traders talk, right? During this time of volatility, we try to actually mix out our long trade, with some form of shorts. Yeah, shorts. It can be a put, or it can also be a short call. It depends on the option structure. That means we are actually also at the same time playing both sides. That means on one leg of it we are actually going long, and on one leg of it we are actually going short. Yeah, just in case it does not go rocket or go up so fast, we can actually still earn some premiums or cover the losses from the long with the short call, for example. Yeah. So what we did on this Visa trade was, let me see. What we did on this Visa trade, yeah, for those guys who are here, yeah, just give me some reaction, thumbs up, love, or whatever, and so that I know you guys are still following, or I mean, share it out so that some of your friends can also benefit from what I'm actually sharing here. Okay, so coming back, what trade which we did here is actually we did a poor man's covered call. Okay, and of course, poor man's covered call is basically like a covered call. Covered call means that you own the shares, and at the same time you are also selling a call to actually earn premium. Yeah. So instead of owning the 100 shares on Visa, which I don't have so much money to buy, right? So poor guys would actually use poor people structure to actually trade, and of course, options allows poor people to actually trade with also high returns, as good as people who actually have a lot of money to buy the stock. So we did a poor man's cover call. Basically, we replaced the 100 shares of Visa with a 80 delta long call. 80 delta long call. Yeah. Okay, so we bought a call. I think the call which we bought was 175. We bought a call at 175. Yeah. Why 175 is because on this date itself, let me just put here. Okay, because on this date itself, Visa was actually trading about $198-200. Yeah. So when we actually buy a 80 delta call, means that it is actually in the money. Yeah, in the money. In the money means that the strike price of the call which we buy is actually lower than the current market price. So the strike price was somewhere 175 is very low lah, somewhere here lah, somewhere here. Yeah. So 175 is somewhere here. Somewhere here. Okay, so 175 is here. So we bought this is actually 80 delta. And why we actually put 80 delta is we try to actually mirror stock. Yeah, mirror stock by 80 delta. And of course, 80 delta is equivalent to also about 80 shares of Visa. Yeah, 80 shares of Visa. So if you guys are familiar with delta, that is what 80 delta means, like 80 Visa shares. Yeah. So we bought our options at 80 delta. What's happening here? Let me choose this. Okay, we bought at 80 delta one call at 80 delta. Okay, one call at 80 delta, and we choose expiry. I think that time was about December, the December month expiry. We took that as the expiry, and of course, why we actually choose so long dated one is to have lesser decay in event Visa don't go up so fast, right? the decay on this call would be slower. If you actually choose a very short expiry call option, right? The option value will actually go down very fast. Yeah, the decay is actually very fast. If you choose a longer dated one, then of course the decay will be slower. Okay, and that is one thing which you also need to know the basics when you actually trade options. Okay, then the other one which we did was at the same time we sold a call. We sold a call at 205. Yeah, we sold a call at 205, and this call basically would actually make some premiums, and we collected about $1 we sold a call at 205. Yeah, and that time Visa was trading 198 to 200. Yeah, so we saw a call at 205. So basically there is about six or $7 for Visa to actually move up before this call gets in the money. So this is actually out of money call, and of course if and this expiry was 9th September. Yeah, so I think it was basically more or less 1.5 week expiry because I entered this trade on 31st of August, which was a Wednesday. So 9th September expiry, about how many days? About 10 days, 10 days expiry, and I collected $1 for this. So overall, the trade, I think I paid about, let me see, I have this here. I think overall the trade I paid about 29.25. Yeah, so I paid about net. I paid about 29.25. Yeah, both the long call and also the short call at 205, long call 175. Okay. Then what happened, of course, is that the market continued to bounce. Right, the market went down lower. So of course, Visa continued to went down. In fact, the next day, Visa went down. And of course, I'm not worried if Visa continue to go down, because remember, I have this short call, and the lower Visa go down, I will make money on the short call. Okay, I will make money on the short call, and on the long call, since it is actually how many expiring December, right? December, which is probably about September, October, November, about 90 over days. Yeah. So there is actually a lot of less effect on the reduced price because it's longer dated, right? So I'm not so worried. So I in fact I want the Visa price to actually come down so that I can actually earn this $1 from the short call. So it came down on that day, and of course the price actually closed higher on that day itself. I mean, basically it closed even higher than the price which I've actually entered. So of course, when that happened, the whole trade itself is already positive on the second day itself, and of course on the third day itself, it was going up and it was coming down and all. So as I said, because of the short call earning premium, I'm not so worried about the price fluctuating up and down when I'm actually in the trade. Yeah, because if you look at again as the benchmark coming through on this S&P, right, we felt that it will actually form a good support in the next days lah. So that is basically our thesis going into the trade. You guys, before you actually go into a trade, you also need to actually have a trade thesis so that it can actually carry you through the trade, and you will actually not panic when the price does not go your direction. Yeah, and of course, if you actually understand your trade structures, that means your option structures which you're actually going in, how the P&L perform. So you will fully understand the effects on the price action towards the value of your options. So again, post that, the stocks was actually going up and coming down. In fact, it was actually coming down until I think on until on 6th September itself. On 6th September itself, which was basically about a week after that. A week after that, a week after that, S&P actually rallied. S&P actually rallied only a week after that. But in between that, the trade did not lose much, mainly because of the short call protection. Yeah, short call protection. So the trade did not really lose much. I think the lowest it went was 196. We entered probably at 198, 199. Yeah. So then S&P rallied. S&P rallied. S&P rallied. After about 6 days, S&P started to rally, and of course, with the S&P rallying, right, it also brings all the other boats up. Yeah, all the other boats up. I think a lot of other stocks were also up when S&P actually started. Because at the end, why S&P rally? S&P rally is also because the component stocks within S&P goes up, right? So again, you look at Visa was actually going up, right? After the 6th. And in fact, on last Friday, which was 9 September, the expiry date, it actually went slightly higher than 205. Yeah, remember the short call. We do not want it to actually go in the money. We do not want to actually it to go in the money. So on that day itself, it went above 205. In fact, it went as high as 206. So I was deliberating on that day whether to actually continue the trade or to actually exit the trade. Okay, to continue the trade would mean that you roll your short call for another week or 2 weeks at another strike, the same strike price or higher strike price. Of course, if you go on the higher strike price, you will actually get less premium, because on that day itself, the share price was 205, 206. Yeah, 205, 206. And of course, what I decided on that day is I decided to actually close the entire trade instead of rolling it. And of course, if I see that Visa has actually gone up here by how many? About $8. Yeah, from the lows here, it has actually gone up and rallied very strongly last Friday. Very strongly, I think it went up about $4. So I decided, okay, Visa might need to rest, right? Because even if you are exercising, you are running a sprint, a marathon. You sprint a bit and you need to rest. You sprint a bit, you need to rest, right? The same for stocks. They sprint a bit and they need to rest at one point in time. Of course, they can continue to go up, but of course, chances are if they start to rest, your profit will actually come down. So I decided to actually close the trade. And overall, I think for this particular trade, I generated a return of about 14%. Yeah, a return about 14%. It cost me about $2,900 to actually enter the trade. And within 10 days, basically, the profits which are generated give a return on investment of about 14%, roughly about 400 over US dollar. Yeah. So of course, it is quite a good trade for 10 days. 400 over dollars is also quite a decent profit, only for one contract. Yeah. So this was the trade. Of course, I can also share with you where is that? Share with you the trade here. Yeah. So this was actually the trade. Yeah. Poor man's covered call. Poor man's covered call entered on 31st. The short call was 205. The long call was 175. Yeah, long call 175. We bought one here. We sold one here. And on 9th of September, we bought it for 29.25. Entered 31st of August. And on 9th of September, we actually closed it by buying back the short call at 28 cents. We sold it for 121. We collected a premium. We bought it back for 28 cents. on expiry date. And of course, on the long call, we bought it for 30.46. We sold it at 33.78. So all in, the realized profit less commission was about 420. So the return is about 14.5%. Yeah. So this was the Visa trade. Of course, I can continue to roll and how to say, I can continue to roll it and keep the trade right up till maybe about October. Yeah. But of course, I decided, okay, let's not do it. If we were to do another one, let Visa retrace again, and enter into another trade next time. So not always the option structures which you actually do, right? You need to actually follow the full process. Like poor man's covered call basically is like a covered call where you own the shares, and you continue to sell premium to actually make the money, right? And of course, for this one, since we do not own the shares, so it is not a problem for us to actually close the position, take profit. And of course, when Visa actually comes down again, and of course, if Visa comes down again, then that's the time where you can re-enter the trade, and these are the levels again where I will be watching Visa, right? Visa. These are the levels again where I will actually be watching when to enter the trade. Okay, so let me delete this so it's clear for you guys. Okay, so this is Visa price here, right? So Visa price has actually gone here. Looks like yesterday also gone up, but it looks of having some kind of fatigue, and this is the 50 moving average, again another level of resistance. You can actually see this was support. It can also form a resistance. It reached above, it may come down again later. Yeah, of course, this again depends on the S&P this week. If all the so-called data releases are actually positive, then of course Visa can continue to go up. And the next level which you need to actually watch when it is up is around this 218 level. Yeah, this 218 level, if you see here, I already put an indication. 218 is another indication where I will actually potentially trade Visa, trade it down. Yeah, trade it down means that sell the top. Yeah. And again, when I will sell the top, I will also look at the S&P come in the coming weeks, whether I will want to actually sell the top for Visa. And here is possible how the things can actually work out in the next 1 to 2 weeks. Okay, assuming all the data are very positive this week, all the data are actually very positive this week. In fact, I would want all the data to be very positive this week so that Visa price can actually continue to rally up. Okay, so once it actually continues to rally up, right, and going to all the so-called levels, which you can see, this was 1 top, 2 top, 3 top, and of course this is also a very strong level of resistance at this 218 level. Okay, so it can rally up, and of course if it does it this week, it means if it does it this week, it needs to go up by $10. Okay, $10, if you divide $2 a day, probably can happen. Yeah, probably can happen. So if it goes up, hopefully it goes up. I don't have any position on Visa anymore, but it doesn't matter. I can let it go up, and then I will actually wait for to look at the S&P. Okay, if you look at the SPX, right? Okay, SPX can also continue to go up. Yeah, it can continue to go up. I don't care. Okay, it can continue to go up, and of course, if it continues to go up again, there are levels where we actually start to see resistance coming through. Of course, the level which we mentioned just now was 4,200 level. Yeah, so of course, if it goes up this week and at this level where it actually starts to constipate, and when it comes next week on I think 21st is Wednesday, if not mistaken, the Fed meeting, right? The Fed meeting, and S&P starts to constipate. constipate. So go into diarrhea, and risk on before the meeting, right? Possible before the meeting. I mean, market may want to actually take profit because of this huge rally up, right? They might want to actually take profit, some profit before the data is actually released. Then how to say? Then of course there may be some short potential to actually sell the top if Visa price action goes into that level, coupled with the price action of S&P. Yeah, so these are the things which we watch. Whether it's the top or whether it's the bottom, this is how we actually go into trade structures, and also choosing what type of option trade which we actually want to use, trading with how to say, higher security, higher safety, or going into taking bigger risks, but having a higher higher kind of returns. Yeah. So if you understood this, or if you actually how to say, get how we actually go into our thoughts going into a trade, give me a thumbs up so that I know you guys understood it, and I've not wasted my time how to say, explaining this to you guys, because it's very important. I feel that it's very important to actually have this kind of thinking going into a trade, and not blindly going into a trade, how to say, following recommendations without understanding how to say, the time when to actually get in, and also the time when to actually get out. Yeah. I think I mean, there are also several trade ideas which we shared over our other channels, and I think one of it we shared yesterday on Twitter. Okay, we shared yesterday on Twitter. You can go to our TikTok. Okay, we have TikTok. Where's TikTok? We have a TikTok channel. We have a TikTok channel. We have actually started this TikTok channel, I think a couple of weeks back, to give I mean, viewers more up to market information lah. Yeah, because we felt most of the time people are mostly glued to their handphones and all, right? Yeah, so this would actually be a bit more meaningful if we are actually trying to get into trades. So this was actually one where we actually shared on TikTok. It is actually on the it's actually a binary event trade lah. Basically, it's more of a speculative trade, and I think it is a bit advanced. I would say it is a bit advanced for this trade. You can actually learn it. But please don't trade without understanding fully, because there's one risk. There's of course one risk on this trade, which is actually the implied volatility. Okay, because normally if you guys know binary event, right? Binary event is actually binary event is actually the events like earnings is actually one binary event. You can have some form of acquisition announcement, can also be one binary event. And of course, for Twitter, what is going to happen today itself at 10 a.m., which is 10 p.m. 10 a.m., which is 10 p.m. Yeah, 10 p.m. Yeah, 10 a.m. 10 a.m. I don't know what time is it in Malaysia or Singapore. They are actually going to have the shareholders meeting to approve the merger with Elon Musk, that has actually signed a merger agreement with Twitter. So there is actually three conditions for the deal to actually go through. One is, of course, the shareholders' approval, which I think it will be carried, which will be approved, because the only one which is actually opposing to this deal is Elon Musk, right? Although he was the one who actually wanted to buy, but after that he was actually trying to back out of the deal, right? He was actually trying to back out of the deal. Okay, so the other one is of course his financing, his debt financing. Of course, if he's actually forced to do it, he has no way but to actually work out his financing. And the third one was actually his request from Twitter to actually show him how many fake account is there. Okay, so these three preconditions, today itself, the one of the precondition would actually be met. So however he don't like it, however he don't want to buy it, I mean, he would be forced to do it legally if all the preconditions are met. Yep. So again, binary event, one thing, as I said, is we do not know where the direction will actually go. It can actually go up or go down. In this trade in particular, we actually want it to go up. Yeah. And of course, Twitter has actually gone up by $2 or $3 for the past week. And I mean, basically, we just need a pop. Pop means that it shoots up just from a bit more speculative that, okay, is actually one step closer to getting the deal done, because the merger is actually going to be done at 54.20, and the current price of Twitter right now is between 42 and 41, 42. Yeah. So of course it won't jump to 54 because earlier it has already jumped to 54 on the first announcement of this deal. It came down after Elon Musk tried to avoid the deal. And of course, these few days it has already gone up. So with a positive announcement, it will actually, it can actually go up, potentially go up. Hopefully it does. But the downside is on binary events is when pre-binary events, the IV is high. Okay, pre-binary event, the IV is high. And of course, the trade which we actually structure here, the downside is that after the after the binary event or the results of this event comes out, the implied volatility is actually going to drop. And of course, when the implied volatility is drops, right, it will actually hurt the trade. It will actually hurt the trade. So the thing is, if we actually enter into this trade, we need to actually exit immediately if you see the pop coming through. That means immediately if you see Twitter price shoots up, you need to actually exit the trade immediately. Whether it is going up by $1, $2, $3, $4, $5, doesn't matter. Once you see it, you exit, and especially if you see some form of profits in the trade. Yeah, going into the trade, I think I paid about 30 or $35, 30 or 35 cents going into this trade. Yeah, so I mean, to actually get 100% return, right? I mean, I just need 35. It goes up by 35 cents, right? So it's actually not a lot. So I just need it to pop up a bit, exit before the IV comes down. Yeah, because the IV can actually come down quite fast. Maybe 30 minutes, maybe 15 minutes, I don't know. Yeah, so before the IV comes down, if it pops, you need to actually exit the trade. So I will be watching the shareholders meeting and watching the price closely, because I actually want to be very nimble on exiting the position. Even if the price does not go up, if it actually comes down, I will also exit the trade even with a small loss. Yeah. And again, going into such kind of trades, normally I use option structures which are very cheap and which has relatively very low risk. Yeah, that means even if you lose on the trade, you will actually not lose a lot or more than what you have actually paid for it. So for this case, $35 US. Yeah. So this was a trade. Go and watch the TikTok. Yeah, get more subscribers. I mean, if you guys want me to actually share more, right? I would want to see more subscribers coming through the new channel. Yep. So that we can give you more contents. I mean, I love doing this kind of things, because on one side, it gives me also the motivation to trade and also to share. And of course, if you guys benefit from listening to our show, it gives me more, how to say, more drive to actually share this out to you guys. Yeah, so it's all for free. I mean, hopefully you guys like and appreciate all these newsletter, all these shows, all these channels which I'm putting up, and hopefully one day you guys can become a very good trader, better than me. I'm not that good. Yeah, better than me. Yeah, better than me. And of course, if you guys benefit and make money from trading, or even start trading by learning some of these, taking away some of these pointers, that will be great. So if you guys have any question, I think I'm a bit, I've covered a lot more than I should today. So if you guys have any questions, do post it here, or even on our Facebook channel. Do post it there. Post your comments on the TikTok. Share all the videos from Facebook, YouTube, if you know where our YouTube channel is, TikTok, and of course that would be really great for myself. Yeah. So yeah, this week, watch out for the news. Watch out for all the how to say, all the releases which will have some form of effect onto the S&P and the market. Yeah, but again, just watch the price levels of the support resistance of S&P, together with all your favorite stocks which you actually trade. Yeah, just try to actually go along together with it. You would be more or less on the safe side. Yeah. All right. Until next week, I will catch up with you guys, and all the best trading the market this week. Yeah. Bye bye.